Welcome to Unaccountable, the world's okayest accounting game show for product news, updates, and more. I am your charming chap of a host, Tyler Otto, and I'm joined by the lovable lad, Jeremy Van Grolson. Hello, sir.
That's nice of you to say. Hello, sir. How are you?
You know, I feel like we made it past March 15th. Life's getting better. Dude, I've got 2 jobs posted right now. I had 3 clients sign in the last 24 hours.
Wow.
I feel like I'm holding on for dear life.
That's awesome. Congratulations, first of all. And do you think one thing that I haven't been able to crack with our firm yet is when are people signing and why, right? And it's always, we've talked about this roller coaster where it's like, oh, we've had a month or 2 and nobody, and suddenly 3 of them just like submit the button and let's do it, right? Any idea why, or do you see that seasonality and any thoughts behind it?
It's because I went to a conference over my birthday. I think we talked about this.
We did.
And I crushed it at that conference. Man, this eye candy was on full display.
What were they all from the conference?
A good chunk of them. One existing client bought another hotel, so that was a freebie. But, you know.
Yeah. Cool. Congrats. Yeah.
Thank you, man.
And also congrats for getting through March 15th. So now 1 more month to go. Then you get another deep sigh of relief.
Yeah, because, you know, my wife listens to this and I keep telling her, I promise after April 15th, I'll be back to normal. I promise. Now, what normal is up for debate. But
I'm glad you caught that one before I did. All right, sir, let's look at some news that came in.
Yeah, what did you find?
Week or 2. A couple things I thought were interesting. So I know this one has been kicked around a little bit historically, but the regulations now that are being required, I think it's through the SEC, that they are requiring now that public companies disclose emissions and other climate-related details in their public filings. And you'd be like, well, this is an accounting show. We're not environmentalists. Why are you talking about this, Jeremy? So they estimate, though, that the audit and attestation firms are going to be the ones.
I like that word.
Yeah, right. Are going to be the ones that are likely helping do the data collection and reporting for this, and did an estimate that they expect assurance firms to overall fees to increase by about $900 million each year, or 18% over current levels. So yeah, something that I don't think historically you've thought accounting and audit firms would be included in, with like environmental type things. But they also, you wouldn't think they're included in game shows, not game shows, award shows, but always like PricewaterhouseCoopers is bringing out that envelope and handing it to Al Pacino, who will then screw up announcing it.
This is part of that, like that ESG push, right? Environmental, social governance.
Oh yeah. Good afternoon.
Yeah. I mean, but it's good to know that, you know, like there is room for more income for the accounting firms that can get into this space. So, I mean, as I told you, I'm trying to get my CPA one day. So maybe one day we start going down this route.
You are a masochist. And ESG, that's not the stuff that's in your Chinese food you get, your Asian food.
Yeah. Keeps it good for a couple months. Yeah.
Extra MSG. Delicious. No, cool. So yeah, I think just how will that impact the industry? And I wonder if there'll ever be like a credential or a facet of the CPA program that it's like, you are trained to do this environmental usage reporting summary. I got to think that they're going to hone that in now, and that's going to be like some kind of a role, right?
It's going to have to be some other agency besides the AICPA, because man, they haven't changed their regulations in years and they're struggling to make any changes. But I wouldn't be surprised if some agency starts providing this.
Yeah, and it was talking about that it won't just be audit firms or the big accounting firms. There are specialized firms. Apex Company was one that they mentioned before, and it's going to be like, now if you've not done this before and you're required to, are you going to engage your auditor to try to build on this service or find a specialized firm to do it? So maybe some cost competition, but I feel like there's, just because it's getting thrown out there's going to be a ton of people needing it. So there'll be plenty to go around for a while.
Good article. What else did you find?
Yeah. Also related to the accounting world, I don't know if you saw this one, but 2 major accounting firms in the last 2 months, 6 weeks or so have gotten huge minority stakes, or actually one of them was a majority, but like capital infusions from private equity firms. So I think the first one was, what was it here? The second one I know was Grant Thornton that just came out in the last little bit. And the other one was Baker Tilly. And Baker Tilly, I think, got $1 billion from Towerbrook Capital Partners. But so, yeah, just a ton of private equity firms that are looking in the accounting space to inject money and increase their returns.
Which, as with all things, it starts with the big firms, and then it goes to medium and small, and then they find a new industry. And so at some point, the capital funds out there that are looking to do something with money to generate returns, it's going to go further and further down the industry. Now, I don't think they'll ever be interested in a half-assed podcast, but might mean something for those outsourced accounting firms.
Yeah, I agree with that completely. And the one fun statistics I saw on this too is it said there have been maybe 4 or 5 of these over the last couple years. And they said that the firms that received this private equity injection have returned or grown 38 to 100% every year.
Whoa!
Whereas the firms that haven't have averaged around 18%. So whether it's using it for acquisition, building out your offerings to the public that you could monetize. Yeah, I mean, just a huge difference once you have that Mr. Moneybags in the bank that you can use to your war chest to do whatever you can do.
Wow, that is insane. Good finds this week, sir. I'm excited to intro our first game this week, which we are calling It's a Cruel World. Oh. Yes, Jeremy, you and I both spend a lot of time in this accounting community and sometimes speaking with brand new accountants and bookkeepers who do way too much on just cash basis. And as you and I know, it's a cruel world. You need to be managing financials on a accrual basis. So, Jeremy, I want to walk you through 4, maybe 5 scenarios where I want to tell you what a cash basis accountant or bookkeeper has been doing. And you need to tell me, if done correctly, what accounts are actually being used on an accrual basis.
Ooh, all right, man. Let's test some accounting chops.
Absolutely.
I'm a little scared. All right, let's do it.
All right. Question 1. Jeremy owns a small shoe store specializing in flip-flops known as Jeremy's Thongs. This outlet accepts payment through their credit card processor. Now, the cash basis bookkeeper debits the bank account and credits sales. But you, the accrual-based bookkeeper, what 3 counts are affected when receiving revenue through a credit card? I'm looking for 3. You could get bonus points on a 4th.
Receiving revenue from a credit card is first, there should be some fees due, right?
Okay.
Think about that. And then are we having tax concerns here too? Like sales tax?
That would be another bonus point. I'm more looking for what's the missing account on revenue recognition.
So when you get a sale on a credit card, you do not get that money right away, right?
Correct.
So there's going to be some kind of undeposited funds or clearing account to get that revenue in, right?
Yes. What I was looking for is what's frequently referred to as either the merchant clearing account or the credit card clearing account. Because if you record revenue on March 31st, because you had the sales in your point of sale system, usually it takes 2 to 3 business days for those credit card funds to hit your bank account, which should be hitting the clearing account until they deposit in your account. Now, you are correct. You actually got double bonus points, Jeremy, because nothing in life is free. There are merchant fees involved. And we need to account for taxes probably as well, because Jeremy's Thongs are subject to sales tax.
Yes, they are. I feel like we should... Ian, can you get me some thong song in here? Yeah. That's good stuff.
Question number 2. Joe's Crab Shack, a small restaurant, pays $8,000 today for 10 months of their insurance policy. Now, the cash basis bookkeeper right now records a debit of $8,000 to insurance expense and a $8,000 credit to the bank account. But you, Jeremy, what accounts are affected as the good accrual-based bookkeeper?
I feel like this would be a perfect opportunity for a accruer to come in, and I would put in that we have a prepaid of, what would it be? It would be $800 a month. So we would have a prepaid of $7,200 and an expense of $800 each month. This one and the next 9.
That is fantastic. Yes, the 3 counts that are affected are the bank account, money came out of it, the expense account, because it's going to get at least 1 month of it, but then prepaid expenses. You are throwing that to a prepaid expense account. And people, please do not do this to your clients where you say, hey, you weren't profitable this month because of an $8,000 insurance expense. No, that needs to be spread out over time. But so often we see these brand new accountants to the industry, that's what they do to their clients.
Yeah, absolutely. And you just see the spike and you shudder. Is there an amount for your size clients you typically would or would not spread out for a subscription type model like that?
So what's interesting, we actually say in our contract that anything that cumulatively is $1,200 a year, so $100 a month, we will do on accrual basis. And especially now with tools like Accruer and other stuff, there is no reason not to just quickly go say spread for this period. But even before with QuickBooks, journal entries, automations, it wasn't hard to do. So yeah.
Yeah, I would make sure I was way up. I usually tell my team like $1,000, right? Unless they're super small, where you're going to just see that jump out every time. If it's less than 1,000, just let it ride. If not, let's spread that out and make sure that we're showing the full use of that payment that they made.
Well, especially if it's one of my clients that, their top line is 30 million a year, maybe that number is even higher. Because again, materiality, right? Like, will that $1,000 really affect this month? Probably not. Maybe we don't even worry about it, but spread those expenses, folks, because their insurance for that 30 million is going to be much bigger than Joe's Crab Shack.
Yeah, right.
All right. Question 3, Jeremy. Uncle Ben's Boudoirs, a construction company specializing in bedrooms. He pays a contractor $200 in cash from his wallet.
Ooh.
The cash basis bookkeeper, they did nothing because it was paid from the owner's wallet. Yeah. What do you, as the good accrual bookkeeper, do?
First of all, I have a direct line to Uncle Ben, so I know anytime when these things happen that I'm going to know it. But then, yeah, that should be a owner's contribution and then an expense, because you need to know what they're paying for.
That is exactly right. Jeremy, it's almost like accrual-based accounting. Yes, this needs to go on the books as either a receivable for the business that they're going to get paid back by the owner. Maybe it's a C corporation, right? And you don't want to be messing around with all the contributions and dividends and whatnot. And so you're just going to book it as a liability, a payable that's due back to the owner, or it's an owner's contribution out of equity. But it needs to go on the books somehow. So you nailed it.
Yeah. And this is something I feel like, especially when you're new to the industry or accounting or bookkeeping, that is super hard. And so many people have this question, right? Like, wait, what was involved here? What do I do? And my response is always like, is he going to get paid back? If so, some kind of other payable, right? If not, then it's just money in, money out, all through equity. Put it in the owner's. Like, don't overthink it though, people, but be very cognizant that this is important.
Last question, Jeremy, and this is a tricky one. And Ian, I'm going to need some Eagles music on the background as I ask this. A new owner closes on the purchase of the Hotel California. There is a $10K loan fee expense as part of the purchase. Now, the cash basis bookkeeper, if he's doing it somewhat right, credits the bank account and debits an asset for loan fees. If they did it not right, they debited an expense for bank charges. But let's say they did it right and debited the asset of loan fees. Now, you, as the accrual-based bookkeeper that knows what you can do, your rules, what do you do?
Oof, man, this one's a hard one. So yeah, the loan fees should be a long-term asset, right? That gets amortized. And I believe it's based on the term of the loan. Ooh.
Dude, look at you knowing stuff. Yes, the loan fees can be amortized over the life of the loan, which is a recent change because for a long time there, it just sits there as almost like goodwill and just sits there on the asset list for a long time, but you can expense those loan fees over the life of the loan. So you know how far the loan is. And if you have a tool like Accruer or something else, you can just put in how quickly those need to be expensed.
Yeah. And this one it's just hard for me even to get my head around on how that is an asset. So like, how does me paying something to get a loan provide value to my organization that I'm increasing or like benefiting the balance sheet? I still don't kind of get the functionality of why that is, but I understand the accounting of it.
Well, Jeremy, that is not a question for you and I. That's for smarter people.
Someday, Tyler, someday.
So with that sound, it is time for an app snack, the time in the show where we go over to the benches, get out our orange slices, and also take a bite out of an app. And Jeremy, today we're talking about Tax Planner Pro. Have you played with this before?
I have very briefly. So Tax Planner Pro, brief overview, and I'm just like all the other apps out there. I'm sure Tyler knows 1,000 times more about this, but it's a tax planning software that accountants can use to provide proactive guidance to their clients and hopefully in the long run save them some money from going into Uncle Sam's hands.
It's a perfect way to put it.
Yeah.
I would argue Tax Planner Pro, if you're in the tax game and you're looking to do some just basic blocking and tackling tax planning, right? You're not going to go insane, but you want the easy wins. And if you're going to do this for enough clients, it's economical. If you're trying to do it for a one-off client, it's like $1,000, $1,200 for the first year, or it's $4,000 for a lifetime. It's not worth it if you're just doing one-offs. But if you want the basic blocking and tackling that you can plug in the client's books and start looking at things like the Augusta rule, child employment, bringing forward certain expenses, leasing versus buying vehicles for the business, Section 179, S Corp election. Start looking at all that. It's the easy wins that you can do. Now, I will say the pros and cons of the software is the pros, it has decent detail as to how these work. The cons, and maybe it's not even a con, it's just you got to know what you're talking about to use this software. If you don't understand taxes or these strategies, it's not something you can just turn on and just say, oh, client, here's what you could save. No, you've got to be able to understand the rules and the regulations, but it's a great little software to have a dashboard that auto updates every month when your client's financials get pulled from QuickBooks or Xero.
Exactly why I'm out, right? Got to know what you're talking about with taxes. Yeah, I did play with this a little bit when I was still more in the for-profit world and learned enough to it. My question for you, have you ever or known people or have done this yourself where you've taken a prior year of information and put it into this tool and told them like, hey, if you would have pushed these 3 levers, you would have saved $500 in taxes last year? Because to me, if you can do that, and then you can be like, well, I can save you $500 every year, pay me $300, $400, whatever it is under that. Like that's an easy sell to me to business owners.
To be honest, I sell this service for a twice a year meeting at $3,000.
Okay. Yeah.
And literally, I sync up your financials. And if you have multiple accounts, if you have multiple businesses, I sync them all up. You only own 25% in this one, but 50% in this one, but 100% of this one. Great. We factor it all in. Now, certain things have to be accounted for the system to be right, like depreciation needs to be posted monthly. So you got to have clean quality books. But, it's easy wins to also just tell your client, hey, here's what your trajectory is for what you're going to owe. And here's how we could save some money. And I had one client with a 6-figure bill. We were able to bring it down $30,000 and they still had a 6-figure bill, but I was able to point to like, hey, here's $30,000. I got you back. By the way, you only paid me $3,000 for this service. You're welcome.
Yeah. 10 times return there. That's a no brainer. Yeah. Oh, that's pretty cool.
So cool software, leaves plenty to be desired, but I think for the price and if you're doing enough volume, it's a great gateway drug to get your feet wet for the tax planning industry. Well, Jeremy, it is my turn again to keep the games going. Sorry, you get to do a lot of answering today. But we're going to play The Cost is Correct, because I think I would get sued if I called this game The Price is Right. So we're going to say The Cost is Correct, Jeremy, where I am about to list off some features of some cool new tools that are out there. Some you may know, some you don't. And then I'm going to give you a price. You tell me if you think the actual price of those features in that tool is more or less than the price I give you. 50-50 shot here.
I appreciate that because I would be embarrassing myself if you just made me throw these out of the dark. So, all right, cool. The cost is correct.
The cost is correct. All right. The first tool at $6 a client. This tool is a quality control platform for month-end reviews, or for even reviewing potentially new clients. You connect their financials, QuickBooks, and it will give you a quality score of their close out of 100. And it will identify all those deficiencies, and your staff can work, or you as you're selling can work to identify how you're going to fix all those things. Some of it, is identifying balance sheet accounts that have balances that shouldn't, like clearing accounts, or transactions that are over a certain threshold that could be fixed assets that weren't posted that way. But it'll also give you, and this is my favorite part, a list of every single unreconciled transaction on bank, credit card, and loan accounts. So you can quickly see if any hanging chads are out there on those key accounts. And it will also give you volume by each account. So if you're trying to do pricing, it does that as well. At $6 a client, do you think the actual price is more or less than that?
Ooh, I'm going to go more.
It's actually $4 a client. Now, this is slightly tricky, but this platform, Verify IQ. I don't know if you've heard of it.
No.
It still looks like it's in its infant stages. Like it seems like there's something they're building coming along. And some of the things it catches, I'm like, that's not really an error. That's not an issue. But just being able to plug in a client, and it's $99 for 25 clients. So $4 a client. But being able to just plug in a client and get a quality score, and particularly to get all the transactions that haven't been reconciled as of that month end, is huge, because then you can quickly see if your staff missed something. I've loved it so far playing around with it. Curious if that's a pain point for you at all.
Yeah, I think it is, because now if you're doing a quality review, what are all the steps that you need to go into that? First, make sure it's things are reconciled and the dates are to the right thing. And then if I'm more worried about it, then I need to open each of them up and then scroll down to these are the things that are open yet, and look at the dates and all that. Yeah, getting a succinct list of that. $4 a client. Yeah, that's probably at least, even somebody who I think I am efficient with this process, for me, that's probably at least break even, right? For time that I'm saving.
I would hope so. Hope so. Question 2. This program, at least in my demo, looks like that QuickBooks Cash Forecaster that got discontinued, except it works. Right?
That would be nice, right?
I know. Who'd have thought? It's like they looked at what QuickBooks was trying to do and said, oh, we can actually do that. So it'll look at invoices coming up, bills coming up, and project them. But then you can also plug in projected projects, which projected projects would be a good band name. But it's also a way where you can say hey, I think these ones might materialize, these ones might not. So you can forecast sales that might happen, won't. It even in its program predicts your business's future death date. Yes, it calls out your death date.
Oof.
When you're going to lose cash. So it has that moving target that you can keep looking at as to when your death date is, which is kind of cool to simplify a cash forecast down to a single item that means something to you. For a product like that, they have several different tiers, but their base product that can do everything I just said, is it over or under $50 a month?
$50 a month to do it
per account, per client.
Per client. I'm going to go less.
It is $60 a month when paid annually. This is float is, they're looking at your cash flow. Yeah. Can you float? Yeah. Float, it has a relatively unique looking interface that it seems reasonable. You can see where your money's going. You can plug in assumptions. You can do lots of different scenarios and have a whole bunch of different metrics. If this is one of those platforms or one of those services, I hope if you're doing any sort of cash flow forecasting for your client, this is advisory. You should be charging a chunk of money. So $60 a month shouldn't hurt you if you're charging your client correctly for cash flow forecasting services. You should be charging at least $500 just for that service standalone. Jeremy, you and I talked on a prior episode where I bundle that with all my Frac CFO for an insane fee.
Yeah, too. But yeah, good for you, but it's worth it, right? The amount of money that they're saving on this, or the guidance that they're getting, are awesome. And yeah, I completely agree with you. We had a client just this week reach out and be like, hey, can you be proactively telling me each week what amounts are out there in float that I have in checks, or things that are going to post this week, so I can make sure at the end of each week to pull only the amount I need out of my savings and put it into our operating account so we can maximize our return on those. And we're like, with what we're doing now? No. That is a ton more work, right? You need to proactively look at these things, know the timing of your bills, all that stuff. As long as they make it easy to put these data points in there and project it out and give you the detail that's needed. And I'm not talking every account, but parent accounts, right? That's what I want. Personnel costs, office expenses, facilities, all that stuff. You could have that work in your big fluctuations. That's pretty cool.
Question 3. This software is to the next level. This one is not only looking at a monthly and weekly cash flow, but it has algorithms that you can adjust to help predict. It looks at historicals, you can adjust drivers, it has unlimited users, real-time financial metrics. On some of its paid plans, you can go up to a 5-year projection, do multiple scenario planners, and all of these models that you do for your client. It's not just cash flow, but it's P&L, it's balance sheet flowing through on all of these things in the model. And all of these models can then export to Excel. So you're not just sending your client to a portal, you can actually have it in your deliverables that it goes to everyone else. Now, this is another one that I would argue absolutely should be fractional CFO advisory services, that you're covering your cost and then some to use a software like this. But Jeremy, this software, is it over or under on its base plan $125 a month per client?
I feel like with how you were opened this up and talked about it, that you were setting me up to say higher. So I'm going to go for it and say higher.
You know me so well. Yes, their base plan, clockwork.ai. I had the pleasure of meeting the founder of this company at QuickBooks Connect, Fady. He has his own podcast, The Real Slim Fady. But
Awesome.
Yeah, it's a good name. It's a good name. But anyways, they have built this out. So he was CFO for several companies and built tools to try and automate the fractional CFO. Now, they have some very robust stuff in here, and I've played around with the tool, and it's got a lot of cool things going for it, but you would have to train your staff on how to be a fractional CFO. It's $160 for their cheapest plan, Insight, $400 for Predict, their middle tier, and $640 for Ultimate. I mean, you better be charging a pretty penny to do this sort of forecasting. But if you want a super robust platform that can really do some generative metrics looking forward, I would give clockwork.ai a look.
So I know, like, we both use Reach a lot for these things now for our reporting. Are
forecasting.
Foreshadowing.
Sorry.
Foreshadowing. Is this one of either of these something you're thinking of potentially replacing that in your toolbox?
No.
Not yet?
Nope.
Okay. All right. Interesting.
I still have a love for Reach. Speaking of question 4, we have a software that does dynamic reporting that integrates with Gusto, Xero, QuickBooks. You can do custom reports and live dashboards. Wonder where this is going, as well as budgeting and forecasting, Jeremy.
Yes.
Now, it is $150 for one client, but if you're an accountant and bundle a bunch of clients, it is cheaper. Is it is cheap, or is it still more than $40 a month per client?
I think it's less. If I remember. Yeah.
Yes, as you have said, Reach reporting, $29 a month per client to have what I would argue is the most customizable reporting software out there. And they're getting better at budgeting and forecasting. Their budgeting and forecasting is neat. It can't do it yet by class and location, which is my biggest hang up to, like, say it's the hands-on best, hands-down best, hands-on. It could be both. Hands everywhere. It's handsy. Yeah. But Reach reporting, it's handsy. Yeah, they're not going to endorse us to promote anything. But I will say it is for reporting. If you want to get nice, neat metrics and graphs in front of your clients that you can refresh instantly, I'm still going to go to bat for them every day. And they're Utah folks, so you got to support local.
Yeah. Oh, I get that too. And again, the tool works really well, right? There is a learning curve. Getting through that, we have somebody on our team I usually lean on to be like, oh, can you put this cool thing in Reach for me? Because it'll take you half the time it'll take me to figure it out. Yeah, I mean, I still think they could do some more with the formatting. Even their out of the box forecasting, not fantastic, but like easy enough to make your own and do cool things with. And you'll set a price point. Think about the other ones right now. Some of those $600, $400 a month. Ugh, that's a hard pill to swallow unless you can sell that for a lot and have the training for your team to do it, because you and I don't want to do this all day long.
But I will say all of these softwares, it's hard for you to justify the cost if you're the firm doing bookkeeping for $200, $250, $300 a month. You can't do any of this. Quit charging low rates. Charge people what market demands now, and use cool software that will let you give a better service.
Yeah, amen.
All right, question 5. A software we know and love now accepts receipts. They do receipt capture for text, email, upload. You know what this is. It's Keeper. They do text message uploads, email uploads, They upload directly in the portal, and they'll soon have a mobile app they have promised before the beta is done. It has item level detail when the beta is done, they've promised, which is hopefully going to be here soon. And you can even see like the email that an attachment was submitted with. So if they mention something in the email, you can then use that to categorize. It's fantastic, but we know the software is cheaper. But Jeremy, over or under $20, is the price worth it? Where do you think the price is? What would you pay?
Ooh, what is that? What do I think it is, or what would I pay?
What's the right answer? Is it over or under $20?
Ooh, under.
That is correct. So once the beta is done, they're actually offering it for cheaper right now, but it's going to be $15 a month. Now, I bring this one up just because I have a slight beef. People are very upset that there's a new fee for this, but like there's a whole lot of web services, OCR technology, and this is still cheaper than Dext and better than Dext.
Yeah. Oh, I agree. And that's what I think is lost on some people. There are just people out there that think everything should be free and handed to them. And like, there are smart people out there like Ben and Kenny that are just blood, sweat, and tearing to get us cool tools out there and want to get reimbursed for it accordingly, as they should, right? They're making your life easier. That's why we get into this game. That's why we're in the game right now, to do that for our clients, right? I don't want to do it for charity. I think I charge less than a lot of other people in the space just because we work with charities. But still, like in the grand scheme of things, we all want to come out ahead a little.
Last question, Jeremy. Actually, a tool that you and I know and love. This was our first tool we talked about in Unaccountable. Right Tool is releasing a new feature, which, by the way, those guys at Right Tool, they're just freaking involved in everything. Like Hector and Mark, they've got their hands everywhere.
I am insulted by that implication. I am not everywhere.
Mark Corum? Dude, how did you get into our podcast?
I mean, you guys just left the door open. I mean, you guys got to lock things up better if you don't want me to come in.
Jeremy, rule number 1, lock the door and put a sock on it. You know this.
That's right. The riffraff that comes out of the woodwork. Dang
What's
it.
the sock about? I've never heard of that before.
We'll educate you later.
Yeah.
Mark, what are you doing here, man? This was my game.
Well, I mean, if you're going to talk about features that are coming out or tools that are coming out, then I think we should talk about a new thing that Right Tool is doing.
All right. Steal my thunder. What do you guys got coming?
Coming down the pike, we have a feature that allows you to allocate costs from a class or location or customer into any number of other classes, locations, or customers. With the click of a button, it generates these journal entries that can be as small as 4 lines or as big as thousands.
And it just like, how does it know to allocate? Like,
Yeah.
does it do it off any smart methodology?
It does it based off as smart a methodology as I can come up with, which is to say that we have a whole user interface that allows you to set what percentages you want to do. If you want to make it so it's proportional to how your classes are already set up inside of QuickBooks, so you're not messing
like
with
by
those.
Revenue or by profit or
Any of those. Even you can press a button, it'll do it by that. If you want to just be like, nah, I'm lazy, I just want to put everything in evenly, we have a button for that as well. And then finally, if you're just really into it and you're like, I want to go down each of these classes, you can manually put in whatever percentage you want and go off to the races with it.
And you could pick any amount that's in a class now and make it go to any other ones. Ooh.
So like if I have an admin department that all my, I don't know, my software costs are going into, and I want to spread it out proportionally based on revenue to all the individual sub-locations out of the admin department, couple clicks, I'm done?
Yeah, pretty much. I mean, it's a little more than I'd say it's like 4 clicks rather than a couple, but still. I mean, it is a lot.
As long as we're
more.
not getting 5. Jeremy can't count past one hand since the incident.
Yeah, that's right. But also, like, the alternative is like 15 clicks and 3,700 keystrokes on the keyboard to do this. So this is pretty cool.
Yeah. Well,
And
we're
you said,
hoping
Mark,
so.
it's going to do by customer as well?
Yes, it's not there yet, but it's getting close. A main thing I'm concerned about is how big the journal entry is going to be once we allow to do it by customer. But you know what? That's a fun thing that we will come up to when we come to it.
But yeah, think about that even internally as we're allocating costs to our customers for profitability models. That's huge. Like right now, that's a painful entry in some of the things you're spreading out. Wow. Okay. I like that.
Yeah.
Okay.
I mean, it's crazy just in testing alone, just how much time I could see it saving people if they did it frequently. I mean,
Yeah.
but
Right Tool, as you guys advertise, Right Tool, the tool that saves you seconds. It's true, but those seconds add up.
Yeah.
Yeah, I mean, that's at least the goal anyways. I mean, there's some features that are a little bit more than seconds, but for the most part, we just like to make the little things that annoy or frustrate you in QuickBooks Online just a little better.
So Jeremy,
Yeah.
this is your last question.
Okay.
Is this new feature for existing pro users, is the add-on more or less than $10 on their current subscription?
I'm all discombobulated now. Like, I'm excited about this tool. I forgot what we were talking about. You guys do some pretty good value. I'm going to go less than $10.
Jeremy, yes, you are correct. Yeah. It's actually free. Like, well, not free. It's if you're already paying for the pro subscription, you're not paying more for this. They're just building in value, dude.
That's awesome. Can you remind too just like all the pricing levels you guys have just for the listeners?
Yeah, so we have basically a pretty flat pricing model. It is $50 per month for the first user and then $15 per additional user you add on. Now, you are a nonprofit person, so if you just email me at mark@monkbee.com, don't ask, then I can apply a discount for you that will make that $50 for the first user $15. So it is just a little bit cheaper for you if you're a nonprofit user or you work mostly with nonprofits.
We do not profit at Unaccountable. Are we qualified?
We can submit you a very pathetic tax filing that shows our losses.
You know what? If you will send me the filing, I will consider it, because you have to be brave to put that kind of information out there anyways.
Right.
Jeremy, sidebar, can we kick him out now? Like, how did he get in here?
I don't know, but like, we need a locksmith coming ASAP.
All right. Hey, Mark, can you go outside real quick and just, we just really quick need you to go pick up the package out on the front porch.
I mean, I guess since you guys are gracious enough to keep me in here anyways, and since I'm such good friends and you guys would never do anything mean like kick me out, I'll go look for a package right now. Just be right back.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
All right, Tyler, it is my pleasure to host this game today and start throwing some fast figure questions your way.
I'm not going to lie, I'm pumped.
Yeah, are you? All right, you look like you're on.
It's been a while. I'm ready to play.
Yeah, you look like you're on your game today. The last couple episodes, we had a day in mind. So I took that and tried to keep a theme here. So let's get started. Play ball! Let's go. First question. So Utah does not have a Major League Baseball team. Within 50 miles, how far away is the closest team from Salt Lake City?
Professional,
MLB, yep.
Probably Colorado, 400 miles.
All right, what are the number of months into a fiscal year that an entity can elect to be taxed as an S corp?
75 days, or 2.5 months.
Within 100, how many partners are there in the Big Four accounting firm with the most partners?
12.
Within $50 million, what is the difference in payroll from Major League Baseball's highest spending team to their lowest?
300 million.
What is the average fee that tax professionals charge for new clients in 2023?
Not enough. I'm going to go $450.
How many feet is it from the pitcher's mound to home plate?
Ooh, 56.
How many years do you depreciate residential real property using the straight line method?
39.
How many strikes are in a perfect game of bowling?
36.
How many balls are there?
No.
No way, we're going on. How many balls are there in an 8-ball rack when playing pool?
8?
According to George Carlin, how many dirty words are there that you cannot say on TV?
6.
All right.
Wait a minute. So strikes, sorry, for some reason I heard strikes, baseball, so I thought 3 strikes you're out, and then I times it by the 12 rounds, In bowling, because you have the 10 rounds plus the 2 extra.
I mean, we're still going to make that one wrong because that made me laugh inside lovingly.
Yeah.
All right. So we should, if we are competent, so always a little bit questionable there, be releasing this on the 28th of March, which is opening day for baseball. Kind of. So I was actually at the gym this morning and ESPN was
Bragger.
on TV far away. And I was like, wow, they're showing this Padres-Dodger game for a really long time for spring training. However, there are actually 2 games today and tomorrow that they're playing in South Korea that count, that are really like potentially another opening day, but normal opening day, Thursday the 28th. So baseball theme. First question. Utah does not have a Major League Baseball team within 50 miles. How far away is the closest team?
It's got to be like the Colorado Rockies, the Arizona Diamondbacks, or like San Fran Giants. So 400 is my best guess.
All right. It is. Oh, nope. It is the Rockies in Denver. So that is 520 miles away from Salt Lake City. Ooh, not good out of the gate. All right. Let's see if we can get better on that.
I mean, you didn't specify like driving or bird's eye.
Oh,
Yeah, I'm going to put that one back on the question asker.
I don't think you get within 50? I don't think you get an 80-mile swing at the bird flies there, but I could be incorrect.
I would like a recount.
Moving on. Number of months into a year that an entity can be elected as an S-Corp. You said 2.5, 75 days, right? Good call. This would have been helpful information on our last podcast because researching this would have been, that would have been cool if we would have told them you got a week to go and then you can't do this anymore. But I have to say you can't do this anymore.
I had a client we were doing the taxes for that I kept asking for the information in TaxDome.
Yeah.
And then they send everything over and I'm like, you made a lot of money. And you didn't elect X Corp. Thanks for submitting all of this on March 17th. Better luck next year.
Ooh, yeah. And there's nothing you can do, right? It's not your rule. So, good. Nice work. All right. The firm that has the most partners of the big 4, how many are there? You said 12.
I have no idea.
6,585.
Oh, wow.
Yeah. I mean, to be fair, like neither one of us has worked at a big accounting firm. Thank God, because I feel like it sucks the life out of you, even though I do know a couple cool accountants that work for them.
Can I just real quick, air a grievance on this episode?
Yeah.
Where is it? Hold on.
I thought you were like having a moment of silence there for... Oh, don't give me your map of how the
370 miles as the birds flies. Thank you very much.
No, I'm not giving you that one. That's crap.
For the listeners, I have pulled up Google Maps and done a direct line from the center of Salt Lake to the center of Denver. It is 370 miles. I will take my points. Thank you very much.
How nerdy are you? I didn't even know you could do that in Google Maps. What? Nope, still wrong. Not going back. Sorry. Yeah, so getting back to the partners, right? So this is like the goal when you're editing these firms that you want to be made partner, right? Then you get to enjoy all the spoils. Which firm is it? You want to guess the largest one?
PwC.
No, it's Deloitte.
Okay.
That's the largest one out there. The thing that I found interesting, though, if you would look at their revenue, I think it was 2023, by partner, like they have significantly more partners than all the other ones in the big 4. I think the next one's like 4,000 or so, but made $10 million per partner. While some of the other ones made 13 million. And then the fourth one, I forgot who it was now because I suck, 25 million per partner that they made. So revenues. Wow. That's some jing in there. Moving on. Within 50 million, what is the difference in payroll from Major League's highest spending team to its lowest? You said 300. 256. I'm giving you that one. Nice. Right on the cusp. All right. Who do you think those teams are? Who spends the most?
I'm guessing New York spends the most. Maybe LA. The Angels or the Yankees are my guesses.
Okay. I'm going to need you to be more specific as both of those cities have 2 teams.
Yeah. I'm going to go Yankees and Angels spend the most.
Yeah. You are almost right, but exactly wrong. It was the Mets and then the Dodgers, but you had the cities right.
Wow. Okay.
I was really surprised. I figured the Dodgers were because like they just seem to buy everyone lately. They are the new Yankees, but like the Mets were at $315 million. And like, wow. Yeah. What about the lowest?
I'm going to guess it's Oakland since they're looking to relocate.
Yeah, it is Oakland at just under, probably around 60 million. And did you
Because
see
Utah, we're fighting to get them. They're
Yeah.
actually going to come play here while they're building the new stadium in Vegas, I think.
Yeah. Oh, they're going to play there. Like, is there a stadium, like a minor league stadium or?
Yeah, we got minor league teams, and our minor league team is building a brand new stadium in the nicer part of town. So before the minor league team gets it, the Oakland A's supposedly are going to come christen it for a couple of years.
Did you see the building plans for the new stadium in Vegas?
I have not.
So I believe the plan is they're going to tear down the Tropicana and they're going to build the stadium there. And it looks like just like the Sydney Opera House almost. If you look at this picture, go do yourself a favor and Google it, listeners. And yeah, it is very comparable to the Sydney Opera House. Yeah. All right. Next one. Average fee that tax professionals charge new clients in 2023.
I said like 450. I just feel like this number is lower than it needs to be.
Yeah, 218. So I think your original response should have been correct, that way less than they should be. And there's subjectivity here, right? Like, what are you all filing for them and whatnot? But even like bare bones tax things, like I feel like that should have a 3 in it just for your time. And if they want a professional that you know what you're doing and provide some guidance, that's got to start with a 3 at least.
But you said the average.
Yeah, it's true. Yeah, I better check.
You said the average. Like, that means there's proper fees propping that number up. So, like, are people doing $40 tax returns?
There must be, right? That there are people just doing, and you know, some of those old timey ones are just like, Edna, come in, bring me your W-2 and I'll make the papers. But yeah, this is from Yahoo Finance directly. So yeah, average fee. Just made sure I didn't.
And if we can't trust Yahoo Finance, who can we trust?
Right. No one. All right, next one. How many feet is it from the pitcher's mound to home plate?
I don't know. 56?
You said 56. 60.5. That's pretty close. That's not bad. I'll give you that one. The next one. How many years do you depreciate residential real property using the straight line method? You flopped a couple times.
I did. It's either 27.5 or 39. And I don't remember what I said.
You said 39. It's 27.5.
Dang it.
Can I ask, what is the basis or where these numbers came from that they're so obscurely not a nice round number that's right next to them that would make potentially more sense?
I'm glad you asked. No, you cannot.
Okay. Like, who picks it? Well, like, 30 years, 40 years. Nope. Let's go 39 and 27 and a half. That'll make everybody's life easier.
I mean, I feel somewhat justified that I at least knew the numbers. I just can't keep them straight.
Yeah. Oh yeah. No, I would have failed that one totally. So, okay. All right. How many strikes are there in a perfect game of bowling, Tyler?
So if you strike every round, you get the 10 rounds plus the 2 extras. So it should be 12. Then I heard 3 strikes, you're out in the back of my head. So for some reason I timed 12 by 3 and got 36.
I made sure just to hammer those baseball questions into your head just to throw you off at this point.
Yeah, I combined the 2 sports. Thank you.
Yeah, you're welcome. All right, how many balls are there in an 8-ball rack when playing pool?
I said 8.
15.
Oh.
Yeah.
Oh, is that what you call normal pool?
Yeah, 8-ball. 9-ball is where you do the diamond, and then I don't even know how much is there.
All right.
9. Duh. 9
I'm a
ball.
dum-dum.
Ooh, that's
Okay.
fine. No, all good. All right, last one. According to George Carlin, how many dirty words are there that you can't say on TV?
I don't even know what I answered.
6. There are 7 dirty words you cannot say on TV. I'm not even going to try to go there because I think in a social media post today, you told me I have to behave myself to make sure that Earmark doesn't blacklist us. So
It's true.
yeah.
But I think we've desensitized over time, so it's probably 6. I'm giving myself the point.
Oh, yeah. There's the last one, and that's George Carlin's point. There's one on the end there. It doesn't belong there at all, but you listen to that. I'm not going to spoil it.
All right. Something to go Google. We'll post the link.
Yeah. All right. I think you got 3 or 4 out of 10. Right. Par for the course, Tyler. Nice work.
I'll take it. I always want room for improvement.
That's right.
Jeremy, with that sound, it is time for our winners and losers of the week. And partly, I would argue, you and I finally win for once. Have you seen the announcement for BKX this year? They put both our faces on it as speakers.
Yeah, they're scraping the bottom of the barrel here, right?
They really are. But you know what? One man's trash is, well, I guess in this case, everyone's trash, but hey, good for us.
Yeah, that's right. Yeah, this is pretty cool, right? My first time speaking there, you have before, twice, I believe,
Yes.
and have been
Yep.
insanely eloquent at it and really good. You could never seem to talk the next day, but during your talk, you do really well. I think the voice, if you think about 2 episodes ago when you were going through puberty on air, think about that 10 times worse, and that's Tyler the next day after he speaks.
It's true.
Yeah.
Yes. And Jeremy, what are you talking about? What's your subject?
My subject is talking about maximizing your team engagement when you're remote.
And your title?
Pants optional, maximum remote team engagement. What about yours? What are you gonna tickle us with?
I'm all about these small investments you can make in your business that most people won't do that eventually will pay off. So I'm titling mine, Get Lucky, the small bets that lead to big wins. So between you and I, pants optional and get lucky.
Hey, now it's a party. Yeah, looking forward to it. It'll be a great time.
And Jeremy, for loser of the week, I wanted to call out, I don't know if you saw this, but there is legislation out there, a landmark settlement that in California is going to probably drastically reduce fees for agents on selling commissions for real estate, which we know California, it's absurd already in the real estate market, and people have been making money hand over fist buying and selling property. It's going to slash the fees that a lot of these buying agents are getting. We'll link to the article, but I wouldn't be surprised if we see a large exodus from people in that profession in California coming up here.
And I think I saw this article, but did not research it broadly here. But I think this just is in California because I think there was a challenge to the National Association of Realtors that more or less called out deceptive practices or monopolization or something, where it was just the standard for them that you would pay 6% as the buyer, and then the two agents would split it at 3% each. And like how this was not called out for collusion or a monopoly or whatever prior to this is beyond me, because they numerous events or occasions where they did this and they said, well, if you're going to go with this other realtor, all the other realtors aren't going to let them in their realtor club, and we may not put you on the sites and advertise it as well. If you don't go with your realtor that's part of this 6%, you're paying it. And it's like, it's crazy.
Yeah. What's funny is right after I started seeing these articles, I have jobs posted right now. One of the people that got through is a California realtor that's looking to leave the industry. And by the way, her resume was impressive. We're going to interview her, but it did make me laugh that it was right after we saw this article.
Yeah. And it's totally going to trim the industry, right? Like the cream of the crop are going to raise up and people who can do it. And unfortunately, there are good realtors out there potentially worth this, right? That will advise you and get you in the right places and sell your house for a lot. However, just given how the housing market right now is, and just trying to afford a house as a young adult is impossible. Like dropping this fee a bit is welcomed overall for, I think, the economy.
Well, Jeremy, that's all the time we have for this week. Before we go, we did get one new review on Podchaser. Hey, we're on Podchaser, Jeremy. MoneySense21 says, Jeremy and Tyler are a dynamic duo, an informative yet funny podcast that leaves you with important advice, but also makes you laugh out loud. Thank you for keeping us on our toes with bookkeeping tax advice with a humorous slant. Hey, that was us. We did that.
Right. That one's a good one. Thank you.
I'd hang that one on my fridge. Maybe I will. My kids don't get all the real estate with their report cards. I'm going to put that one up there.
Yeah, I'm going to do that next time when my kids do have like the school thing. I'm like, Daddy's podcast review right next to yours. All 5 stars except for that one.
All right. Well, all of our listeners, be sure to post your reviews from your customers on your fridge. Send us a pic. Put it in the Unaccountable Facebook group where the shenanigans ensue.
Hey, did you see that we had a wonderful, I think it was Tanya, who I love to death, started a good conversation on our podcast wall on Facebook. So the perfect place to talk about things that are slightly inappropriate, but very applicable to our bookkeeping community, that would be our Facebook page. Please come and talk about all those things.
It's a private group for a reason.
Yeah.
Until next time, Jeremy, have fun decorating your fridge.
Thank you.